Your data tells a story. But are you listening to it or just ensuring it? As technology gets smarter, the protection needs to get sharper. Hello and welcome to the very first episode of our new series, The Risk Review, where we deep dive into risk, insurance, and resilience. I'm Ishani Doshi, the Chief Marketing and Communications Officer for Gallagher Insurance Brokers in India, and I'm delighted to be moderating today's session where we talk about cyber and technology risk. Joining us today for this session are three leading experts from across the globe of Gallagher. We have Damien Walker, Managing Director, Technology Practice, Gallagher USA. We have Suraj Teruat, Cyber Leader, Gallagher India. And we have James Wall, Executive Director, Cyber Practice, Gallagher UK. Let us get started. Thank you so much, gentlemen, for joining us for today's session. Pleasure. We'll start with the first question for you, Damien. What are the new age risks that clients should be aware of? How the insurers in developed markets like US or UK are adapting to such risks? And what are some of the key challenges that they face while providing insurance solutions for them?
Thinking about the risks that our clients are facing into 2025 and beyond. Obviously, I think the hot topic today is AI, right? So when you're thinking about AI risks, you think about how fast bad actors can get into systems because it's no longer dependent on a human being attacking a system, it's a machine. So our clients need to be faster, more nimble. They need to implement AI security standards themselves, and they're always looking to adapt, which puts a lot of force on their balance sheet. They need to spend money on this, and they also need to make sure that they're always educating themselves about what the new risks are. And that ties into things like our managing director of our technology, of our cyber practice in the US, just covered deepfake technology, where you actually can no longer trust the human being that you're looking at for cybersecurity to clear payments and so forth, because now the bad actors can actually put on fake videos and fake voices over themselves to facilitate bad transactions. So our clients need to be more sophisticated, put greater security measures in place to make sure that they're battling the AI process in touch with what's going on in the market. Secondarily, I think we talked about this with my colleagues, is the systematic risks that our clients face. Most of our clients no longer own their own security, their networks, their computer stands. It's all cloud-based, and they're highly reliant on their vendors. So if you look at a couple of more systematic risks that have hit the market recently, the first one being CrowdStrike. They're an IT provider. They had a bad patch that went out to their entire network and pretty much brought down the entire globe. Airlines couldn't operate, retailers couldn't transact, companies couldn't manufacture because of one bad patch. So systematic risks like that are affecting the entire world. Another example would be CDK in the United States. They manufacture automotive software, and they run pretty much every automotive platform that there is in the US. And they released they had a bad release and got hacked. And when that happened, the entire automotive sector went down for almost a week in the US. They couldn't fix cars, they couldn't sell cars, they couldn't order parts. So the entire auto sector in the US went down because of this systematic risk, one software vendor bringing down the entire industry. So that's become a pretty big issue for the industry as a whole. And then lastly, regulatory. Regulatory is really big for our clients. If you're trying to be compliant with GDPR, you're trying to be compliant with California or Ohio in the United States. India is rolling out its own regulation standards. So I think not only is your IT people focused on the IT security, if you will, the software and the hardware and how they implement that to an organization, now your IT leaders also have to be aware of the regulatory environment across the globe to make sure that what they're rolling out is compliant, not just now, but into the future, which is no longer just a simple IT risk management. It is a corporation risk management strategy. So anything else you guys on regulatory that you're seeing in your individual countries that come to mind?
I mean, from a supply chain perspective, definitely the ecosystem's only getting more complex, especially from an IT vendor. And when you focus and look at global companies these days, especially where they're sort of storing and managing data in different territories, and they can become unaware of local sort of privacy or data sort of laws in those particular territories. And being very easy to then breach said laws, which could obviously lead to a liability claim down the line. So from our perspective, it's understanding what that IT supply chain looks like and where that data is being managed and if it's being managed properly in certain territories.
Next question for you, James. What advice would you give to technology clients looking to strengthen their risk management and insurer strategies in the current environment?
Great question. I think firstly, it would be education. It's not just education for the C-suite who are making obviously crucial decisions about the company, but also employees, understanding what the current cyber threats are, understanding what to look out for, especially from a sort of social engineering aspect, as Damon has already touched on. In addition to that, there is also, general frameworks to align to. So, one of the big ones that we promote in the UK, especially, is the ISO 27001. It is a fully encompassing regulatory cybersecurity control framework, which which sort of bleeds best practice for our clients. In addition to that, cyber insurance in general as a risk transfer vehicle as well. Probably not 15-20%, I would say, of sort of mid-market corporate clientele probably purchase cyber globally. Obviously, we have certain jurisdictions and certain territories such as the UK and the US where that sort of hit rate is a bit higher. But in general, cyber insurance as a risk transfer vehicle is crucial to protecting the balance sheet of our clients.
Right, absolutely. Next question for you, Suraj. How are insurers recalibrating risk pricing models to reflect the unpredictability introduced by climate-driven disruptions, particularly for tech business dependent on distributed cloud infrastructure?
Insurers are not only reacting, but they are reinventing the way they look at climate risks, which can impact, global IT / multinational organizations' operations. And particularly, it applies to cloud operations, where most of the organizations across the globe are nowadays dependent on. What insurers that I learn are trying to do is develop bespoke AI-driven analytics, which can actually drive simulations based on satellite imagery, the cloud center positionings, data coming in from the natural catastrophic loss avenues. They are able to superimpose all these data onto analytics, which can run simulations and then stress test the cloud centers, which are based in various geographies of the world, in order to test how they would be resilient to a catastrophic climate event, like, let's say, a wildfire or an inundation, sudden inundation and flooding in a particular area. So insurers are able to not only depend on historic loss data, but are again running real-time simulations in order to check the resilience of operations of cloud centers across the globe. Now, organizations which have very strong ESG practices, organizations which have cloud centers which are more renewable energy source dependent, organizations which have very robust disaster and disaster continuity mechanisms in place, would drive better ratings from these insurers who are deploying AI analytics. So organizations will have to move into more of a resilient, operating their data centers, rather than depending on peer group benchmarkings and stuff like that, in order to better come out with risk transfer solutions in recent times.
Something I never thought I would use as a tech broker is Archipelago, which is our internal software package that we have that help clients forecast cat loss onto their locations. Especially thinking about my geography in the US, we have California, we have severe wildfire danger, and then in Florida, we have a lot of flood danger. Yeah. We have some clients that have a property in both, where insurers are no longer taking the risk. So now we're using that software to actually help clients predict that risk and what insurers may do, so that they can think of alternative solutions as they start to think about how to expand their operations, how to be more resilient and have different geographies. So interesting that as a tech broker, we're now using property cat modeling, which I never thought I would do.
Yeah, that's quite
really
interesting. and to predict those climate risks and then understand and then give it out to the insurer so that you are resilient and you're already protected once
Exactly.
it strikes.
Exactly.
So,
So we're not letting the insurers dictate to our clients. We're helping them get to a point where they're still insurable.
You can't just look at the general historic loss runs or sort of trends from the past 10 or 15 years to then map what's coming down the line.
Yeah.
There's going to be, there's automation and the technology industry is continuously evolving. So in order to map the new risk, we have to come up with a risk quantification method, which is essentially mapping or trying to map out the unknown moving forward. So it just adds a bit of a curveball to that whole quantification piece.
yeah, it's like just diving into the unknown and just predicting and keep
Correct.
learning and keep evolving. Right. Next question for you, James. What are some best practices in cyber insurance and strengthening one's cyber posture? How Gallagher can ensure that the cyber posture of their clients is strengthened and among the best in the industries and amongst the peers?
Great question. And obviously, being a cyber insurance broker myself, one I have to tend to answer and give feedback on a daily basis. So, listen, firstly, the emergence of ransomware completely shifted the minimum control requirement, in the cyber insurance industry, predating sort of 2018, 2019, not to throw any underwriters or sort of anyone under the bus here, but we didn't really understand what good looked like, in my opinion, from a risk management perspective, especially with dealing with ransomware attacks, which has probably been or has been the biggest driver of claims across our market the last 4 or 5 years. One of the most crucial sort of controls which came out the back of sort of the ransomware epidemic was multi-factor authentication for remote access to your organization. Obviously, during that time period, it sort of coincided with COVID. So there was a bit of a shift from employee on-premise based working to remote working. And it took some time for companies and IT teams to actually get up to speed with the right protections being put in place to stop or to sort of reduce that unauthorized access via a third party. For me, MFA is probably the most crucial control, alongside sort of suitable backups as well. So having backups for your data, for your applications which are stored off-site, MFA protected, immutable, so they can't be altered or encrypted, is crucial. Firstly, it removes or reduces the potential need to pay any ransomware demand in the event you actually have an attack. And also at the same time, that restoration piece is crucial, so you get back up and running a lot quicker than you would do if, for example, your backups have been affected. So for me, they're probably the most two crucial controls. And then, there's also a laundry list that insurers sort of ask for, really, especially the larger you are as an organization, that sort of requirement list tends to grow. Employee training, phishing simulation training being another. So once again, making sure everyone's educated on the ground about unauthorized access into the organization. There are EDR, SOC and SIEM tools. So, third-party vendors coming in, scanning the network, making sure that obviously everything's running smoothly. And once again, there is no hackers or unauthorized access sort of members on there. And then lastly, a strong and robust BCP or disaster recovery plan. Wake up tomorrow morning, what do you do in the event that you've been attacked, and who are the key stakeholders at your organization who are going to be responding to that incident? You need to be potentially notifying your cyber insurance policy, but also at the same time, you need to be connected with the third-party vendors who are going to get you back up and running again. So forensics, legal services. If there's been a data breach, for example, make sure you're managing that properly. So in GDPR for UK, we have 72 hours to notify those individuals, notify the ICO, and there's a separate timeline to notify said individuals. So there's lots of different parts to think about. So a really robust incident response plan is crucial. So, making sure they're getting back up and running as quickly as possible.
It's like an entire ecosystem that you need to
It
strengthen
is, yes.
in order to have everything in place.
Yeah.
Right. Next for you, Damien. How do you think are the rising geopolitical issues impacting the insurance industry and technology clients who generally have multi-geographical exposures owing to their operations and client base spread across the world?
Yeah, so we've been here meeting with clients in India, and sometimes the clients very mono country focused. They're only worried about where they are located. But most of my clients have India locations, they have US locations, Australia, the UK. So even small middle market companies now find themselves exposed geopolitically across the board. I think what most clients are facing, or especially in the most recent political environment this year, is supply chain disruption, right? If you have software issues, if you need chips, if you need hardware, if you need plastic surroundings for your products, every client's worried about U.S.-China relations, or what's going on with U.S. and Russia relations, and how does that affect us? And it comes everything down from basic supplies to oil to energy. Yeah. So clients are very, very worried about supply chain. I think the next biggest thing that I've been seeing more recently that clients are starting to talk more about is talent. Visas are becoming more difficult and challenging to get, especially if you're trying to come or go from the US. Right. I have a really good close family friend that worked for a large payment processing company in the United States. They have laid off their entire division that was responsible for moving people around. So that tells you that this kind of global mobility has kind of come slowing down. Right. And I think when you slow down, whether it's foreign students being educated in the United States that want to go back to their home countries, or get an education in the US that they can bring back to their country and bring that talent, that skill set, or we're trying to recruit people from different countries with different values into our political systems or our company systems. Not moving people around will become very challenging in the future for our clients. And then just this nation-state war that we keep going on. And it's always been around that China has hackers and Russia has hackers. And I think for us as brokers, one of the things we have to make sure is that our clients are covered for at least as broadly as we can for nation-state actions. And that's where we find clients are, especially those that are politically exposed, are concerned about those type of coverages. So I think those are kind of the three main areas where our clients are concerned geopolitically.
Right. Thank you so much. Last question for you, Suraj. War is an exclusion under most cyber insurance policies with multiple exclusion endorsements. Considering the current global conflicts, how we can ensure that our clients have the best coverage to protect themselves from the threats?
So we live in a world where there is constant geopolitical tension amongst the countries, and with good examples of the Russia-Ukraine conflict and then the Middle Eastern conflicts. Insurers have come to realize that the cyber warfare could very well be part of these conflicts which could be used by one nation to bring down the infrastructure of the other nation, resulting in significant systemic losses for the insurers. And it is with this impact in mind that the insurers have started developing war-related exclusions. So if there is a loss associated with or directly emerging from war or war-like situation between two countries, insurers would want to stay away from the losses that could be accumulating and then debilitating for such insurers. And from that perspective, and it is with that perspective that insurers have developed cyber war exclusions in recent times. But again, people like us, and again, we've been coordinating with the insurers in order to bring more clarifications in these endorsements, in these exclusion wordings, in order to bring more carve-backs. Like, for example, earlier the exclusions used to be very affirmative and broad. But again, we've brought in carve-backs related to how an attribution of a cyber warfare would be done. It cannot depend on a unilateral declaration by a country, but the attribution would have to be based on a lot of other credible sources. There are carve-backs around coverage for facilities of insureds which are outside the impacted zone of the conflict. But there could be still spillover effects where the operation which is outside of the conflict zone could still be impacted. But again, we have developed wordings where the losses associated with this particular facility of the insured, which is outside the conflict zone, is still covered. So there are clarificatory wordings which are developing from time to time. We are engaging with insurers in order to bring in more clarity for our insureds. Even in India, insurers have been using an earlier version of the warfare exclusion, which is very broad and affirmative. But again, we've been pushing in recent times all the insurers to bring in more clarificatory wordings, the carve-backs that I just spoke about. Yeah. And that's a work in progress, and we are seeing good level of confidence coming in from the reinsurance fraternity, which is supporting the Indian insurers as well, because again they are seeing similar endorsements being issued abroad, especially the Gallagher recommended wordings, and we are seeing a good fair bit of success in our placements where we are able to bring in these war exclusions with enough carve-backs to provide some relief for our clients. So that's a work in progress, and this is a space which will emerge as the conflicts emerge. People are all in learning curve, and that's how the wordings will also evolve and develop over a period of time.
Yeah. Okay. Thank you so much. The final question, like a one-word rapid-fire question, and we'll start with you, James. If you could delete one cybersecurity buzzword forever, what would it be?
Great question. Mine would probably be unhackable. Obviously, speaking to a lot of clients over the sort of past 8-9 years, people who are on board or not quite aligned with me when I'm sometimes giving feedback in regards to their current risk management and what needs to be put in place from a MFA or a backup perspective, as we've spoken about. And there is this preconception that some clients or some particular IT teams may feel as though they are unhackable and they are a fortress from an IT perspective. What we've seen the last sort of few years is the innovation provided by the hackers, and it is a matter of when and not if they decide to sort of hack a particular company or particular infrastructure. They have the ability to potentially get in. So unhackable would be my
That's
removal.
a good word. Suraj?
Well, I will replace the word cybersecurity. I think that terminology is redundant in recent times. It's just a factor that organizations have to look at. But again, organizations have to actually evolve into how cyber resilient can they become over a period of time. Cyber attacks are becoming more and more sophisticated. AI-driven cyber attacks, like Damien just mentioned, are gonna just transform the way the threat actors are going to exploit vulnerabilities. So it is a constant journey that organizations have to get into in order to learn from the threat intel that they are receiving and become more and more resilient in their people, process, and technology aspects. So I would say organizations have to look at resilience rather than security at this point of time.
Resilience.
Yep.
Yours?
All right, I'm gonna steal half of his. I gave this some thought, so
can't.
I had some time to think. So I would remove the word cyber.
You remove the word cyber.
Just cyber and make it security. And the reason why I say that is because I deal with clients holistically.
Okay.
So I'm thinking about other lines of insurance. I'm thinking about D&O, and I'm thinking about their general liability. I'm thinking about the other lines. Cyber is like having a lock on your front door for any
Right.
company. Every company has IT security. MFA is now a requirement whether you make a widget or you are an internet service provider. So having cyber insurance is like having a lock on your front door. So not just cybersecurity, just security.
So we have unhackable, we have resilience, and just security.
Yep.
That's it. So it's just like how James said, it's not a matter of if, but when. Thank you so much for joining us for today's session. Thank you so much for your time and for valuable insights that you have shared. I think this is just the beginning of the amazing series on the risk. Thank you so much. Thank you so much.
Thank you.
Pleasure being amongst you.
Thank you.